Your AI system can pass every accuracy test you throw at it and still discriminate. Accuracy tells you how often it's right. It says nothing about who it's wrong for, more often. Here's the complete framework for testing fairness. The tests that matter. A 34-item checklist and what the law actually requires. We'll cover the fairness tests that actually matter, the 4/5 rule, the 34-item checklist, risk tiers, what New York's Local Law 144 requires, and one live example. 3 tests, not one. Demographic parity. Are outcomes similar across groups? Equalized odds. Are error rates similar across groups, not just overall outcomes? Individual fairness. Are similar people treated similarly, case by case? A system can pass one of these and fail the other two. The number regulators actually cite is the disparate impact ratio, the selection rate for one group divided by the selection rate for the highest selected group. Below 80%, the 4/5 rule, is the long-standing threshold that triggers scrutiny. It's simple, it's citable, and most teams have never calculated it for their own system. The full audit runs 34 items across 4 phases: scoping, testing, governance, and sector-specific checks. It's not 34 independent hoops. It's a sequence, and skipping scoping is the single most common reason a testing phase produces numbers nobody can actually interpret. Under the EUAI Act, every AI use case sits in one of 4 tiers: unacceptable, high, limited, or minimal. A biased hiring or lending system usually lands in high, which is exactly where the fairness testing and documentation burden is heaviest. In New York City, Local Law 144 requires an independent bias audit for any automated tool used to evaluate candidates or employees, conducted within the prior year, results posted publicly, at least 10 business days' notice to candidates. It's been DCWP enforced since the 5th of July, 2023, with penalties of $500 to $1,500 per violation, per day. We produce the audit document and the evidence structure. We are not the independent auditor the law requires. A qualified reviewer signs it. In HR, this is the sharpest edge on the whole channel. A hiring tool that discriminates doesn't just create legal exposure, it's actively filtering out qualified people right now. In the public sector, a biased AI decision is a biased government decision. Benefits eligibility, risk scoring, resource allocation, with an accountability bar even higher than the private sector. In financial services, a biased credit model runs straight into Regulation B's adverse action duty. You need the specific reason for the specific person, not an aggregate fairness score. Here's what running one looks like. Pick a sector and jurisdiction, and it produces the executive summary with charts, plus a 9-sheet workbook, the full 34-item checklist, the fairness testing protocol, a governance audit trail, and a permitted and prohibited use case list. 3 fairness tests, a 4/5 threshold you can calculate today, 34 checklist items. There's a free checklist linked below. No cost, just your email. 5 of the 34 items so you can see exactly what's in it. Subscribe for AI governance you can actually ship. Watch next. How AI hiring tools actually discriminate in practice, not just in theory.